Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now a couple words on the gold market. So in general action to the upside is continuing, and market has reached the area that we have previously talked about as the potential area where the market could turn down. Currently it's impossible to say whether this will be the journey right to the 1180 lows as we hope to get Clark and the washing out of the stops that have been placed below 1180s. But what we could say is that this recent rally up from the economical point of view has no foundation, because if you will take a look at the recent physical demand data, you will see that the SPDR fund again has reported on contraction of the storages. The premiums on the China market has decreased from the $4-6 per contract to $1 and $2 per contract, so demand has become weaker. The festival period in India also doesn't provide a significant support to the physical demand, significant support to the gold market. So a positive impact that was expected from these events has not happened, and right now this recent rally on the gold market is mostly indicates the nervousness on the market. Because if we will drop away the negative surprise that have come from the recent data, as you know, the Chinese inflation has dropped to the 5-year low. The Germany export and industrial production has dropped again for the 5-year low. The recent data on the manufacturing activity and the retail sales in the United States also have dropped. These, in general, tells about the slowdown the pace in the global economy, and that in turn will lead to deflation, and any deflation will have negative impact on the gold market, because no inflation, no growth in the gold prices. This we could suggest this logical chain with the normal and calm situation on the markets. But the negative impact that was really surprising for the markets, and that accompanied also with some geopolitical tensions on the Middle East and the Ukraine. Also, another factor is the Ebola spreading of around the globe. I think that mostly this negative surprise and some tensions that makes market nervous has led to the rally on the gold market. Some uncertainty, some sort of the negative surprise and warnings that's usually push investors to the safe haven as the gold is. That has led to the rise of the gold, but not the real of economical data and real purchases. That's why this rally has very fragile foundation, and we suspect that it probably could be over in the nearest time. We do not know whether it will lead to some retracement of this recent rally, or market really will make the march on the 1180s lows, although we hope that the second will happen. But personally, we do not want to bet and to join with this upside rally. We probably will be searching possibility to take the short position, because this situation mostly is attractive for the taking the short position. Take a look what has happened on the daily chart from the technical point of view. This rally has reached the resistance area that we have discussed yesterday. That's the major 618 resistance, 1253, weekly pivot resistance 1, and daily overbought condition. Recall the rule of using the pivot points. When the market stands in the long-term bear trend and weekly pivot resistance 1 holds the retracement up, it means that trend down is still valid, and that is just a retracement. And here we have this particular situation that the weekly pivot resistance 1 holds the retracement up. And that means that this is just a retracement. It's not a reversal. Besides, this is the first swing up. We could call it even as the reversal swing, because you can see that swing up is greater than the previous swing down after the long-term downward action. As a rule, that's just how markets works. Market will show the deep retracement because previous bearish momentum is strong, and market will show the deep retracement after reversal swing, after the first reversal swing. That's why if even we will not get the washing out of the 1180s lows, some deep retracement should follow. On the 4-hour time frame chart, what else we have? Recall our patterns that we have discussed yesterday. First of all, market by the recent rally, as we said yesterday, we will not bet on this downward action because we said that probably another leg up will happen. That has happened. Right now, all that we would like to get, we've got it. So market has completed this A, B, C bottom, D pattern. It's been completed. Currently, it's very difficult to call it as the 3 drive because it doesn't have the clear shape of the 3 drive. But anyway, extensions also have been completed. So you can see this market has hit 127 extension of this first drive. It's 1618 of the crossing of the 1618 of the first and 127 of the second. So these ratios also have been completed, and market even has completed the 1618 of this drive to the upside. Okay, that's why the targets right now have been completed. So what we have, market stands on the daily chart, a daily overbought, fib resistance, weekly pivot resistance 1, and daily agreement resistance, because market also has completed ABCD up right at the daily fib resistance. So that's really significant area to sell and a significant area of resistance. At the same time, we know that this action up has been triggered mostly not by the real physical demand on the gold market, but mostly the weakness on the United States dollar due to the negative numbers that we've got on the retail sales on the manufacturing activity yesterday. So it means that we have no significant purchases on the gold market, and this rally hasn't been supported by the real purchases and by real money. That also adds some weakness and some suspicious on the current rally to the upside. Anyway, I do not call you to sell here, although the reasons to sell and the odds stands mostly in favor of the taking the short position here. But I do not call you to sell. But what I am calling you is that to avoid and to stand off of the possible out from the long position, to not buy here, because market at the resistance and near the daily overbought. It's not time to take long position here. So if you do not want to sell, just do not take long position here by far. That's our short-term view on the markets. But we suspect that this is really an area where market that's probably could be attractive for the taking the short position, and that could be really the area where market could start the journey and the march right to the 1180s lows. That's our current view on the gold market.